Hello everyone. Today I am going to discuss two important monetary policy tools, that is marginal standing facility MSF and bank rate. As we know that under repo operation, banks borrow short-term funds from RBI, but that borrowing under repo operation is limited up to a certain amount which is set by RBI. So when banks cannot borrow under normal repo operation, they use the MSF tool. So we can define MSF as an emergency option used by banks to borrow short-term funds from RBI when banks cannot borrow under normal repo operation. And under this, banks are required to give government securities to RBI as collateral. And the value of MSF rate is always kept 0.25% higher than the repo rate. For example, if the current repo rate is 5.5%, then the MSF rate will be 5.75%. Now we will discuss another monetary policy tool, that is bank rate. So it is the rate at which RBI lends money to commercial banks for long term. Under this, banks do not place any government security as collateral with the RBI. And bank rate is always same as MSF rate. For example, if MSF rate is 5.75%, bank rate will be also 5.75%. Currently, bank rate is mainly used as a reference rate for charging penal interest on CRR or SLR shortfall. For example, अगर कोई बैंक CRR और SLR रिक्वायरमेंट फुलफिल नहीं करेगा तो RBI उसको उस CRR और SLR शॉर्टफॉल पर पिनल इंटरेस्ट चार्ज करेगा, जिसका इंटरेस्ट रेट होगा बैंक रेट प्लस 3% प्लस 3 पॉइंट और 4 पॉइंट, that depends on RBI. So that is all we have in this session. I hope you guys have liked the session. अगर आपको इस तरह और भी